have me? All right, cool.
Okay. So, as we were saying, bull flag here, 1, 2, 3 drives pattern, breaks above. I was targeting these lows because retail is long as we break above the highs, sell stops below the lows. Okay. So now that's negated here. We get a consolidation day. Now we're targeting the relative equal highs. So for Thursday, we're going to look for how retail might be in short positions and how we can enter while they're entering short to execute longs. Does that make sense?
Say that one more time. You said so. We're gonna.
So now that we're seeking longs, we want to see how retail would be entering short positions inside of this premium to target those longs or to enter longs. So let's go into a 4-hour chart. So just to make this a little bit cleaner, this is Wednesday's range right here. So you can see price broke higher.
Mm-hmm.
Oops. And then breaks lower here. I'm gonna make these a little bit. So using this, buy side liquidity is induced here, sell side liquidity is induced here. So we're gonna look for longs on this day in particular. If we utilize this high here, we're gonna see if we can find something. Whoops. We might not find this model. I'm gonna try not to cherry pick as much as I can. Let's go into a 1-hour chart.
That's what I'm saying. Could you go to like a lower time frame to look for the model?
Yeah. So with this narrative in mind, we have Thursday. This is the overnight session from 2 to 5. We move higher and we do finally break above these highs. We haven't broke above them on Tuesday, Wednesday, whatever that may be. So now retail is long here. Okay?
Yeah.
Where are their stops? Well, their stops may be below, inside of this gap, you know, below this high, thinking that retail, or that this high is going to support price. We see price wick down, and then what is this? This is a fair value gap. The type of fair value gap this is, I don't think you've been taught this yet. It's called a BISI. It's a buy side imbalance, sell side inefficiency. So buy side imbalance because it's a lot of buy side here, and sell side inefficiency is because it hasn't gone, it's only gone one way. It's only efficient when it goes back into this range and then leaves it, because we've given an opportunity for orders to be liquidated on the long side and the short side. That's what efficient price delivery looks like. It's offered buy side and sell side.
Okay.
Does that make sense?
All right, I see the fair value gap. So you're saying it's a busy because that candle didn't come back down
It's a BISI because it's a buy side imbalance. So like a SIBI would be a sell side imbalance, buy side inefficiency. So let's see if we can
show
find
me an
one.
example of this sissy?
SIBI.
Sibby.
So a SIBI would look like this. Sell side imbalance, buy side inefficiency. Okay. We don't see it treated as it's usually, as it's meant to in the YouTube model. This is called an inversion of a SIBI, but that's too much. So we're not gonna mess around with that too much.
All right.
But this is a BISI.
Okay.
So we expanded aggressively higher over the overnight sessions, break above this high. So now retail is long. Okay. So using that narrative, we're gonna go into a 15-minute chart. Okay. We have a consolidation again here as prices above this high. And then if we go into the news drivers, this is something that we should be looking at also. For Thursday, we have an 8:30 high impact news driver. We actually have a bunch of news drivers. and then a medium impact news driver at 10. So what happens at 8:30? Well, retail is long. At 8:30, we aggressively seek the sell side below this in-range trim low, below this consolidation range, and then head higher. We retest this range again, and then head higher. So what we could be looking for a model entry would be, if we're doing like a higher time frame, like kind of how I trade off of these 15-minute and 1 hour charts, would be something like this. I could have my stop all the way down here. Obviously, this would not be a very great model if I'm targeting, say, I could use like an extension above this high here. Targeting like 2 to 1, or not 2 to 1, the second standard deviation here. Something like that. If I could use even institutional price levels. So if I go, you'll see these on my chart sometimes. It's IPL, institutional price levels. They're like whole numbers. So I could target like the 3 standard deviation because it's right before this institutional price level, and that's reached right here during the PM session. But I'm gonna see if I can find like a YouTube model inside of this range here.
Okay.
So if I go to a 5-minute chart.
Before we do that,
Okay.
so so if we're buying, the sell side has to be broken, or we have to attack the sell side, and then we need to see the sells a lower low, and we need to see a higher high before we can go into a buy.
Yeah, you want to see, yes.
So I want to see the highs and the lows broke, and then, if I'm going for a buy, I want to see the lows and the highs broke, and then I want to look for price to fall back into the fair value gap, and then take my trade from there.
Yes. So this is this is called a Judas swing. Don't focus too much on a buy model looking at highs broken, then lows broken, and then highs attacked again. Focus more on if we are bullish and the day opens here, we want to look for some move to induce retail to be the opposite direction, which is what a Judas swing is. So this is the Judas swing. Okay? Ignore everything else about this. Say we are bullish for whatever reason it may be. This is what we're focusing on. We wait for this. Because this is what retail is like entering short on. Okay? And we want to do the opposite here. Since we are bullish and this low is attacked here and retail is short, that is why it is beneficial to look for longs.
So if I know my bias is buys, I can just look at that low being hit, and then I know that it's time to go. Like it's time to look for entries. Yep. But I know, so like once the low is hit, like the SSL line right there, that short term, what is that short term?
Sell side liquidity.
Yeah, sell side liquidity. Once that's broken, then we have to wait for market structure to be broke. Like, I don't want to explain.
Yep. Okay.
When that. Oh, go ahead. Sorry.
No, you're right. You're right. So this low is formed, right? And we kind of consolidate here.
Yeah.
So if we aim at this high here, do you see anything in here before I note it? Go to your 5-minute chart and then kind of look at this range here. It's Thursday, so the 26th. During that 8:30 to 11 o'clock session. Uh, 27th, or 26th, I mean, not 27th.
$8. There it is.
So note that 8:30 candle. Go over top of that 8:30 candle, that big red one, that sweeps sell side.
Yep.
That's 9:45, a little bit earlier.
Oh, this one. Yep.
Now press Alt and V. That adds a vertical line. Move that over to the red one. So that's our Judas swing. That's our impulse protraction that gets retail induced into the opposing side of liquidity. Okay?
Mm-hmm.
So after that happens, we're looking for a bullish market structure shift. And that occurs here. Okay? So if I get my little eyeball light bulb, that occurs right here at 9:30. That's under the smiley face. Press like the heart. I believe it's under the heart. Is like the. Oh no, yours are in black and white. Maybe. Oh, it's under icons. So you see emoji stickers and icons. Yeah.
Yeah.
So that is. Mine's in recent. Oh, there it is.
Yeah. Light bulb right here. Here it is. I'll make changes later. It's fine.
Yeah. So. Yeah, the light bulb goes over that high. So this is the high. The market structure shift occurs at 9:30.
Yeah.
Okay. So now we're bullish. Sell side's induced. We have that market structure shift. Is there anything in particular inside of this range that you're interested in?
Looking for a fair value gap.
Yep. Do you see one?
Hold on, I'm looking. Hold on. Wait, I'm getting quizzed here. Hold on, I'm looking. So it gets broken here, right? This high right here, it gets broken.
Yep.
Would this? No, that's not it. Would this be a fair value gap right here?
Nope. Try to like extend your chart a little bit so you can see this a little
Yeah, I
bit
was
better.
trying to find like
There you go.
like that.
Yep. So the market structure shift occurs at 9:30.
So once it breaks here, then I look for price to drop back into a fair value gap.
Yep.
So it's gonna be. It's not right here.
It is like what the range are you looking at? Like hover over the entire range
What do you mean? Like,
of the fair value gap.
oh, here. Let me just
Yeah.
get the square.
Look at your favorites bar. It's gonna be in. Oh yeah, that works too.
Yeah. Okay, so this the low can't go in here. It's not it. Wouldn't this be a fair value gap?
That is a fair value gap, yes, but we're looking inside of this range here, from this low to this high broken.
No, this ain't it.
That's a volume imbalance. You're close though. So the gap is going to be right here. So you see this. This is the first candle right here. 1, 2,
Yeah.
3. So this is your gap.
1, 2, 3. Oh.
It's all right. It's all right.
So right here, this is the gap right here.
Yep.
Okay.
So
Yeah,
that is
okay.
your fair value gap. Your BISI, buy side imbalance, sell side inefficiency. So off of this model, you can enter. Once it breaks that market structure shift, you're in the position right here. Stop loss is going to be at the low. And then you could aim for. Let's just do 1-to-1 to make it simple. Because you're aiming for these highs basically. Okay, so this is your model entry. We're bullish. We had that sell side induced. We have the market structure shift here. We have the gap. So entry is at 9:35. Drawdown is pretty heavy if we go to the low to the entry. That's 5.5 handles. And targeting 7. So this trade, what I would do in your journal after getting this information would be, I would write it in, you can write it in a chat. So.
I got my notepad here. Oh. Wait for something. And this was on a 5-minute, right?
Yep.
Okay. So we went from the weekly to the daily to the 5-minute.
We went from the weekly to the daily to the 4-hour to the 1 hour to the 15 and to the 5.
Jesus. Do you have to do that? Like, just like if you can't you just get your bias from like daily to the or the weekly, and then you go to the daily, and you're like, okay.
Yeah, you can. because
Okay,
like
but
what I was
it's just better to go through all the time frames and then attack on the 5 minute.
yeah, that's what I recommend.
Yeah. Okay.
Trying to get
Oh,
like that
go.
whole view of bullish
Yeah.
on weekly, bullish on daily, bullish on 1 hour, maybe
Yeah.
bearish on 15 because you're expecting this protraction here, and then
Yeah.
bullish on the 5 minute once we get this bullish market structure shift.
Okay. So I guess I'll finish. I'll wait till you're done typing.
Yeah, and then I'll tell you what is going on here. Okay, so in total, if we grab this call out here, sell side is induced at 8:30 here.
Mm-hmm.
A bullish market structure shift occurs at 9:30 equities open here, where we break above this high. A bullish fair gap is created from the displacement away from this 8:30 low here. Entries take it at 8:35, or excuse me, 9:35 here on that next candle. Drawdown is 5.5 handles from with price retesting this busy high again with perfect rejection here. And then stop loss is at the low for 7 handles, targeting 7 handles, which is above this high. 1-to-1.
Is that what you typically go for 1 for 1?
Yeah,
Or do
this
you
is what you're looking for. Basically, like this would be what your target would be, like the first target. If we're going to, if there were further objectives up here, then we could target like 1-to-1. How I don't usually do it based off of this risk model. I'll do it off of levels. You could do whatever's more comfortable for you. So if I was going to take this trade, I would just exit right at this high. I don't care if this is 1-to-1. It's close enough. I would exit here. And then my next target might be a converging standard deviation or like extension level. So if I use this, I can kind of see these 0.5 levels also. We have this 2.5 match fairly well with this 1.27, which is this range here. So this would be my next target. I would target the lower end of that, and that happens to be the high of the AM session. We're slightly into that London lunch. London lunch kind of starts at 12, that dead zone. The lunch hour would be from 12 to 3, or 12 to 1, excuse me. And then if I wanted to target something else, it would be this institutional price level, which would be, if I use something converging, I'd use this -2 and this 3.5, or I could use this 4 standard deviation here because it's the standard deviation right before the institutional price level. So for completeness sake, this level is exact the same. So I target this one, and that target is reached. I'm gonna move this out of the way so I can see this. At 2:05. You're gonna see like this last. It's called the power hour. So the last hour of trading, from 3 till 4. We can see how price aggressively attacks this high and reaches that institutional price level perfectly before the market closes right here. Let me make this a little bit cleaner so you can kind of see these hours.
So, okay. So, that makes sense.
Okay, good.
when I'm looking for like, so if when I know, okay, I'm looking for buys,
Hmm.
and I go to the 5 minute, and all I know I need to, once the sellers get taken out or the lows get taken out, I can start looking for buys and look for that market structure break and the fair value gap. Is it different when it's in a consolidation
Um,
range?
when it's range
Is that,
bound,
yeah, like when is that? Are you looking for that the highs and the lows to be broken all the time? Because he says those were the rules to
it kind of
always look
depends.
for.
That's kind of what's happening here. So like what I said when I said ignore the high, I just wanted you to focus on this
Okay,
because
that
this.
yeah.
So like we do get the highs broken here at 8 o'clock
Okay,
above
yeah.
these highs, and then we go lower. We do that. I just wanted you to focus on. We are looking for longs, and
Mhm.
the focus is looking for that Judas swing, looking for that impulse retraction that gets retail on the opposite side.
Okay. All right. And okay, my next question is, how do you know which low to look at? Like when are you doing it from the last session or the agent session?
It does. It depends on what I'm
Hmm.
expecting for a retracement. We are in
Yeah.
an expansion right now. This is an expansion market profile.
Yeah.
So I am not looking for price to have like some crazy deep retracement here before
Hmm.
moving higher. I'm looking for, so this is the dead zone. This is the session in between the overnight session and the AM session. So
Yeah.
the dead zone low is what gets swept here.
Okay.
And this like intermediate term low inside of this session here.
Okay. Okay. So you're not looking like 4 days out. You're always
No,
just looking at, like the previous. Okay. All right. Makes
because
sense.
we're an expansion model. So if we were in a retracement model, if I was expecting this AM session to move lower before moving higher, like say, what's a good day? I guess Thursday would be kind of like a, or not Thursday, Wednesday. So we see how on Wednesday we have this consolidation for during the overnight session,
Hmm.
and then we move aggressively higher in the dead zone, and now we're here. You see this
Hmm.
consolidation, and then we go higher, then we go
Yep.
lower, then we
Yep.
go back into this gap here, and retrace back lower below these lows.
Okay.
So we're in a bullish market environment, but
Hmm.
if we're expecting a retracement, then we can look for something like this. So if we go into this a little bit more, let's note this civvy. We see this impulse protraction here, and then we get a consolidation.
Hmm.
We're gonna note all these highs here. So at 8:30, we move higher and we sweep this high.
Hmm.
And then at 9:30, we sweep just this low, forming relatively equal lows with this one here. Relatively equal.
Hmm.
So I'm gonna do REL for relatively equal lows. And we form a gap here from that impulse projection away from this low. So if we measure from this high to this low, after we break these lows, that's a market structure shift. A bearish market structure shift. We have this gap here that we could enter inside of. Whoops, wrong way. Short. And then we could target this low here. That's a 0.75. But the main target here, the draw on liquidity, is these lows here. Okay, so in a retracement model, we're looking for price to similarly break higher first to induce these longs, and then market structure shift lower, re-enter that inefficiency, and then continue lower.
Okay.
Obviously, first we target these, we sweep this low. This would like be first. So sell side, buy side, displacement lower, gap, and then continue displacement lower. Expansion.
Okay. All right. It just makes so much more sense when you kind of like explain it, but I'm gonna have to like back test and do like homework and like play through it.
Hmm.
Cause like I get what you're saying. Like I probably a good thing that you did record this video so I can just go back and like look at it.
Yeah, I
Um,
could just post this like this and then do my weekly
yeah,
analysis.
that makes yeah, but that makes complete sense. I mean, it makes more sense you explaining it to me
Good.
like
I'm
this.
glad. Yeah, I'm glad.
Because
There's a
like
lot
there's
of
different
information. Hmm.
yeah, I know there's a lot, but like there's so I like there's different markets. So I guess like what would help me probably is when you're doing your breakdown analysis throughout the week, then I can like look and like understand like what type of market we're in.
Hmm.
Because like right now when we look at like what like this in a weekly, what is it all 1W?
1W. Yep.
Oh, God. So we just know like we're I do you think like we will come back to test these
The
like
all-time highs. I haven't done
yeah
my analysis yet, so I'm not gonna
okay.
confirm
Oh,
that
okay.
or
All right.
with what
So
happened
I
on
yeah
Friday. If we go to Friday,
yeah
the all-time highs were what, this level, I believe. Yeah. See what happened here? How on Friday we kind of consolidated here. We broke lower during that overnight session, or
yeah
during that AM session. We broke below this consolidation here.
yeah
Again, it's the same thing, where the dead zone breaks higher, then breaks lower, then expands aggressively higher, and now look at this, reversal off of this high. So now
yeah
we break into this low. Now it could be argued that this is a market structure shift and now we're going to head lower. I haven't done my analysis yet to confirm
yeah
that expectation. But the displacement away, we're only on a 5-minute chart too. So if we go to like a 4-hour chart, this looks kind of just like a retracement. Like you could argue that this is just testing this and we're going to head higher. So I have to do my analysis from the ground up, from the
yeah
weekly, determine like intermarket relationships and how price is reacting there to really get a good idea of where I think price is going. Right now, I don't want to pick a top here. That's the
uh-huh.
big thing. What I struggled with when I first started was everything was a top. As soon as
hmm
we broke above these highs, I was like, okay, that's all-time highs broken, buy side liquidity. I'm a contrarian at heart. So when everyone is kind of like how I explain this to you, when everyone says don't touch the grass, I'm dancing all over it. Like
yeah
I'm really like I'm very do the opposite. That's just my personality. I just kind of go against the wind.
hmm
So when I first started, it was much. I did a lot more because I also wanted to be right. Like if this is the all-time high and like we crash next week, that's a pretty. I mean, it's pretty shitty, but it would feel pretty good to be like I was the one that capitalized on
yeah
anticipating this to be the all-time high. But you have to be
yeah
very, very careful in that way of thinking because
okay
you're not here to be right. You're here to make money.
yeah
So even though like I could say this is the all-time high and then it moves lower, one, if I don't capitalize it, then there's no reason to be proud of being right here.
hmm
Two, it's such like a low probability from where I understand price is now that I don't gain any experience from that. Like what all it teaches me is if I'm right here and I don't do my weekly analysis, if I just say this is gonna be the all-time high and that we're gonna crash tomorrow, and I don't
yeah
do my analysis properly, I'm just gonna have that overconfidence that is not actually part of what I know about the market. Like that's just gonna translate to um, it's going to translate to next session where my ego is now inflated and now I
hmm
think that this candle's a high and then I over leverage and I get smoked, something like that. So you got to
yeah
be very, very careful. You're not here to be right, you're here to make money. So even like I was wrong with this week sweeping the lows, but I didn't
hmm
make a huge deal out of it. I continued to trade and I think I ended losing uh, like 0.25% or something. It was a very, very difficult market. I definitely pushed too hard on Wednesday, and I
yeah
recorded that VOD and I posted it for transparency. You know, just because I want to show exactly, you know, I'm human, I'm gonna be wrong. A lot of people in this industry only post like their wins, and I'm trying to stay away from that.
Yeah, for sure.
But you have to. Oh, where was I going with this? You cannot allow your emotions to dictate your actions here because, especially with money at play, it's very, very, very dangerous. You have to be very calm. You have to be very weighing the probabilities and knowing when you should or should not be trading. Like Wednesday, I should not have traded at all. Like it was consolidating the entire day. Intermarket was all over the place. I noted that, and I still pushed. And like I was also at like the 3 hour mark at around 10 o'clock because I traded the pre-AM session. So like my mental was cooked. And while I was in a position towards the end of that VOD, I was like, I feel myself getting too emotionally attached to this trade, so I'm out. Like I exited the position and I left. I should, mind you, I should have done that like an hour ago, but I'm still human too, and like I do want to create content for this YouTube channel. So I think that's kind of another reason why I push so hard, because I don't usually do that. But you know, I'm still human. I make mistakes, so I'm gonna talk about that in my weekly review. And you know, really, what I'm trying to hammer home is you have to be like a robot when you're trading, and you have to be you cannot be emotional.
Yeah, I got you. So for the 27th, the 27th, that was today. There was no trade, correct? If we're looking, if our bias we're going up, it's a buy. We're looking for.
I find it difficult. The only reason why I wouldn't have traded is because we've already broken those all-time highs.
Yeah.
And at that point, we're in gray. Like there's nothing for me to target here. I could use fibs and stuff like that. I really don't like doing that very much, just because I don't have a lot of experience with trading at all-time highs, because this doesn't happen very often. If I was going to trade this and I wanted to see continuations, I would aim for this high, and then like if I was going to, like, I would be very, very nimble, because again, this can happen.
Yeah.
Like
that's my thing. Yeah.
A lot of retail was doing that exactly. They might have entered long here, and they got smoked. They might have entered long here, and they get smoked again.
Yeah.
You know what I mean?
Yeah. I was just going based on the 2022 model.
Oh, the 2020. Okay, so.
Yeah, that's just all I'm thinking about right now. Like, just if I don't think there was a trade here, right? Like, if I'm thinking it was a buy, it's just because if I'm looking at the previous session, or like the overnight, this was what 8 o'clock, created that high, and then.
Well, let's look at the news drivers and try to paint a picture here. So if I go to.
Was there any news today?
Forex Factory says there was a high impact news at 8:30 and then a medium impact news at 10. So if I note that on the chart, 8:30 is here.
Yeah.
That's red for high impact. And I also note equities open every day. So that's the low of the session at 9:30. And then 10 o'clock is here. So looking at this chart, we have that high created, that low. Say we are bullish, we wait for these dead zone lows to be swept, and now we can look for that market structure shift long. Say we're staying on this 5-minute chart, and we wanted to note, like, there isn't really any highs to really note here. If we noted this one, for a bullish market structure shift, is there a gap inside of here? No. And even if there was, price just runs away aggressively. We could go into a lower time frame, so let's go into a 4-minute chart. Kind of look at this a little bit more deeper. So
that's crazy.
a 4-minute chart, you can see price is here. We have the market structure shift here. Still nothing inside of this range. And then we just break aggressively higher. 3-minute chart. No gap. 2-minute chart. Still no gap. I doubt there's anything on the 1-minute chart, but we can look anyway. It's probably like a seconds chart. The YouTube model is always going to be there on a time frame, but on the time frame that you're utilizing? Maybe not. Okay, so here's something. So we have this low form. We have a market structure shift. I'm going to use this high just because it's a little bit cleaner. But like this range here. We have that market structure shift. Do you see anything in here? Go to your 1 minute chart and see if you see anything.
Oh, sorry. Yeah, let me. This was where are we looking at? What time?
So this is right after 9:30. So the market structure shift occurs at 9:37. See that big displacement candle?
Yeah, hold on. Gotta zoom in. Okay. 9:37.
Try to fix your chart a little bit. So like. Okay, perfect.
Oh, yeah, thank you. Okay, yeah, here it is. This happened at 9:30. Yep.
Is that
and
low?
then it broke
Yep.
here. And then this is the gap.
Perfect. Exactly. So let's
Yeah, that's
know.
the gap.
There's also a gap lower also. Right
Yeah.
here. Oh.
That's the gap too.
Yep.
Okay. All
There's
right.
like
Yep,
a
that's the
little
gap.
gap here. So with the YouTube model, you can enter at the low of the gap, and then keeping the stop loss here, we are aiming for these highs to be broken. 1-to-1 would just be at that 8:30 open.
Wait, what happens? What do you do if there's two fair value gaps?
Good question. Okay, so the model says that you enter at the first one,
Yeah.
but you allow for price to retest this. So a stop loss here, while that would be an aggressive stop loss, and that's part of like the model if there's only one gap, this does not count.
Yeah.
So you'd have to have it minimum here at like the low, but I always keep my stop loss at the low. It's whatever your risk is. If you want to put it here and you won't be upset if you get tagged out and then it reverses higher, then that's that's up to you. I always keep it at the low because I know that if there's something that I don't see in here and price does actually wick into this range a little bit more, I still know that it's respecting this gap. It could also mohawk here too. So a mohawk would be, say our gap was actually right here.
Yeah.
And it refills it with the bodies, but it mohawks all the way down into some other discount level. That's why I kind of keep it here. So I don't have to think about if it's going to do that. What else did I know? In the YouTube model also, and I don't know, you're going to come up with this also. If I measure like this range here, he likes to look for gaps in a discount. So this would be the only gap in discount. This would be a missed entry here.
Yeah.
I don't really support that idea. You're going to come up with it and then we can dive into it further. Right now, I just want you to focus on how price is reacting to these inefficiencies. So.
Okay. Yeah, so okay, there's always going to be these type of setups, but if I'm just should I just look at one time frame to look at for my entries? Like just stay on the 5 minute. If I don't see anything, I just don't see anything.
Yes, I think that's a good idea. It teaches
Instead of
you
I'm
patience
just
too.
looking for like,
Exactly. You don't want to be like, oh, okay, now I'm on a 15-second chart. Here's a model. Here's a model. Here's a model. Like that's not.
Like what you just did was like, well, you said, oh, well, let's go to the 3 minute or the 4 minute, the 1 second, or 1 minute. I'm just like, yeah, that seems like a lot. Like I feel like I'm just like hunting for something. That
You don't want to look for. If you look for a reason to enter, you'll find it. I know that it's going to. I was surprised honestly that there was a 1 minute chart. I was looking for a setup inside of this range. If I went to like a 15-second chart.
Yeah. Go that low. That's insane.
Yeah, I have the most premium option on TradingView. This is what I was kind of looking at. Is what I wanted to see was this gap here. You see how we have a market structure shift above this high?
Yeah.
And then we have. I'm gonna combine these gaps. You see how Price is respecting that perfectly with the bodies?
Hmm. Yeah.
And this is kind of what I was expecting. I wasn't expecting to have anything here.
Hmm.
And then this would be like an entry if you were on the 15-second chart and this was your model. I do agree, yes, you should stay on the 5-minute chart because I also would do that when I first started. I was looking for the YouTube model. I was going into every single time frame and I was finding it.
Yeah.
I know how price moves outside of the model, so I can do a lot more with that. And like the time frames, I can go down to. I've showed you with the VOD on Thursday or what was it, Wednesday and Tuesday, that I can look for models in the 15-second chart and I can note every 15-second candle as it goes up and down, whatever it does. Just because I know
Yeah.
how price moves outside of just the model.
Yeah.
Your focus on just the model is perfect for what's going on right now.
Okay.
Like what you're learning.
Okay.
I think this is enough to not overwhelm you too much. There is still a lot of information, and I think this lesson was helpful for you. But
Yeah, for sure. It looks good. So like I'm gonna look forward to your breakdown for next week, and then that's just gonna help me uh look for entries or just look for trade opportunities next
mhm.
week. So I can start looking at the chart. And I'm also gonna like back test this stuff too, but it's pretty hard when like I don't have like I'm probably gonna have to pay for TradingView so I can just get more data.
Oh yeah.
So I'm
Also, without paying for TradingView, you're going to be 10 minutes behind. You're
okay.
not going to see it now because now the market is closed.
Close,
But
yeah.
the contracts, you're going to be 10 minutes behind. What you can do to get around that is you could look at the um, the CFDs.
Uh,
So this is the CFD is what they trade overseas
yeah.
to get past like the futures law. I don't think that people are allowed to trade futures outside of the U.S. I don't know exactly what the rules are, but this is how they get around that. So this is the same. If I overlay
Uh-huh.
um, the ES contract, it's the same. It's the
Oh,
same.
okay. Yeah.
Right. It's a little bit different. Like you're gonna have some. If I can find something.
Yeah.
Um,
No, I don't got a problem paying for it. It's just like, do you have to pay more for the data, like the extra data for futures?
yeah, I think it's $7 a month for just the data,
Okay.
and then the TradingView subscription. I don't know exactly how much it is. I pay. I use the Black Friday sale that comes out, and
Yeah.
so I buy it in like a lump sum of, like a yearly subscription. I think it's
Yeah.
comes
Yeah.
out to like $300 a year or something like that.
Sure, it's not bad. All right. Yeah, so I'll definitely do that. Like, I'll start. Well, I'll probably like pay for it and then like hunt for trades, and then like I could just tell you the dates and just make like some drawings up and tell you my thought process.
Yeah, you could even print them out and like write down. That's what I do too. That's why I have my chart like this actually, is because I used to print them out and
Okay.
I don't have a color printer, so there's no reason for me to see the colors. So I think that's the
Yeah.
name of like this template too, is the print layout.
Oh, okay.
So like I used
Can
to
you send me
use
that, Kurt?
what's up?
Can you send me that layout?
I don't
Or
know
can you
how
send me
to.
layout?
I wonder.
Oh,
I don't know if I can do that. I'm sure there's a way,
okay.
but I'm not entirely
Mm.
sure. Like I know back in the day, I used to use this chart layout,
Yeah.
the blue and white. So like on my old videos, I think I have this, and then
Yeah.
I played around with it a little bit.
Or all
But
right. But yeah, so I'll be my plan. I'll go back and I'll start like doing this stuff. But yeah, that makes sense. It seems a little bit. You broke it down in a way that's easier to understand than what he was telling. Like I like the ICT guy. He's just his thought process is like very deep.
yeah,
Like it's not like simple.
I think that he explains things. I think he's a good teacher. I think
No, no,
that
yeah, yeah, he's very smart. It seems like he has a lot of knowledge. I feel like it was just in a way that I'm very simple minded. Like I need like clear instructions
Yeah.
of like what I'm looking for because I'm more of a like I look at things and then I can like figure out patterns
Hmm.
better than like just going deeper into like the theory and stuff like that.
Yeah, I'm very big into the theory. I think that what
Yeah.
ICT doesn't do, he does it in the 2022 mentorship a little bit, but he doesn't really break things down without giving away everything. So, like,
Yeah.
I am holding stuff back just for you to understand this concept here. Like, what I said about how this very gap isn't in a discount. Like, there's reasons why it's not in a discount due to like sponsorship and the type of model that it's looking for. It's like an expansion model variant of the YouTube model. It's there's a lot of different things that I'm like not explaining
Yeah.
because it would just confuse you. But
Mm-hmm.
I think that
Do
he
you? Yeah.
go ahead.
Um, do you think like you can only use one model to be profitable?
Yes, definitely.
Okay.
You don't need to learn everything that I know to be profitable. I went off the deep end just because I am that theory crafting. I'm very similar to how ICT needs to know everything. It's kind of how I am also.
Yeah, for sure. I could tell. Not like you take deep notes, bro.
Hmm.
Like I feel like I don't know, like you're his little brother or something.
Yeah, I had some when I started posting videos. It was like, what did someone say? I was his like long lost son or something like that, which is
Yeah,
like crazy. But yeah,
dang.
I think that's everything. Do you have any more questions?
Nah, man. I know I'm good. I'm all set, bro. I think yeah, I'm just if you when you post the video, I'm gonna look at it again, but I kind of understand it a little bit more, a little bit better. I just gotta look at the higher time frames, look at that certain time, and then find that structure that we were talking about, and just break it down how you were telling me.
Yeah.